Good morning and welcome to BloombergQuint, India's first digital live streaming business news service. I'm Neeraj Shah and you're watching Indian Open. Let's go straight to the headlines. China expects US President Donald Trump to delay the December 15 tariff hike, giving more time to negotiate the first phase of the trade deal. Yes Bank's board meet on Tuesday ended inconclusively. The bank says it is considering proposals from both Citax Holdings and Arvind Singh Brett. Jet Airways lenders agreed to extend the deadline for submitting a resolution plan as the sole bidder awaits clarity on the carrier's defunct flying slots. And after sailing through the Lok Sabha, the contentious Citizenship Amendment Bill will be tabled in the Rajya Sabha for discussion today. And I dare say expect a fiery session and a conversation on that as well. But let's take a look at the trade setup for the day. The US markets in particular and a global setup. Now, this is what's happening. I mean, they ended fairly flat in trade, but the news flow around all websites and news channels and indeed on Bloomberg.com is that China does see a delay in tariffs. The headline on Bloomberg says that how China is seeing the US delaying the December 15 tariffs, but of course the Director of Trade Peter Navarro disagrees on the tariff delay. Now, because of these conflicting news flow around the trade deal or the tariff deal, and mind you, traders I think latch on to almost every single piece of news that comes in from a source of information. The stocks in the US market, while they ended flat, had a fairly volatile day. I mean, the term again used out there is whiplash. I mean, look at that. Just look at the kind of volatility that happened in the US markets in trade yesterday. Fairly choppy, fairly volatile, and I dare say out there the stop losses are a lot more closer. I'm guessing that they would have gotten hit either direction. It's just a very volatile intraday trade, and it's frankly been a fairly volatile last few days for the US markets as well. And I doubt that there would be too much of a change in volatility in the other markets as well, considering the quantum of news flow that we are surrounded with. One, the tariff deal. Two, the Fed meet, whether anything comes around Brexit. Crude is on an upsurge as well. So there's lots happening, and therefore the world markets are likely to remain more volatile than before. Asian screen today is slated to start off on a fairly flat note. In fact, the SGX Nifty 2 suggests that. The question is, while we start off flattish for the SGX Nifty, could there be some more intraday volatility? Now, frankly, if you look at the kind of gash that we had yesterday, you would want to believe that that would be the case simply because the maximum OI position today is an important day, the penultimate day to the weekly options expiry. And frankly, if you just look at what the December 12 open interest position is looking like, the maximum OI on the call side is at 12,000, but on the put side is at 11,900. That's the maximum OI out there. And if indeed we were to succumb to some selling pressure today, then we might well see a bit of unwinding on those positions as well, which might actually lead to some further downside and more volatility. So do be mindful of that. Yes, 11,900 call also saw a significant OI build up too. So from a weekly options expiry position as well, I think this 11,900 becomes a bit of a make or break kind of a session, with enough and more traders believing that there could be a downside to that position as well. So do be mindful of that. It's very difficult to call what will happen, but just that the last few days the sentiment has been so disrupted that it's very difficult to build a case for a substantial uptick in the near term on the trading side. Let's wait and watch if that happens. And therefore, what individual stocks will do will become more in focus. And I want to dwell a bit on the most important stock for the day today to my mind, which is Yes Bank. And I think the meeting today left more questions than answers for a Yes Bank investor, somebody who wants to take a position, because the bank failed to reach conclusion on the fund infusion by investors in what was arguably one of the most anticipated and a key meeting in the recent times. And the fallout of this is that most brokerages have now raised concerns on the bank's ability to raise the required funds going ahead as well. Keep in mind, there are anyways concerns being raised on the quality of the investors or the names of the investors. Because of which the stock, which was at 70 rupees when the first set of names came out, is now at 50 rupees. That's nearly a 30% downtick to the stock ever since the names of the investors came out. And after that, even after that, for what was considered to be a key meeting, the bank has failed to reach any conclusion, and which is why naturally people will question whether or not there will be an ability to raise funds in the first place or not. And Keep this thing in mind. As of the latest release data, which is of September, institutions held 35% shares in Yes Bank, 26% held by FPIs, and 9% held by domestic mutual funds. I don't know how many people would have the gumption to hold on to those holdings in the near term, and therefore I fear that there might be some activity in Yes Bank today. This remains the most important stock to monitor on open in the session. Bharti Airtel is the other one. They're seeking shareholders not for raising capital via QIP, FCCBs and NCDs on January 3rd. Now we have a date in place as well. And I reckon until then, all the news flow around AGR, etc., will keep the telcos in focus. Bharti is showing some resilience. Do watch out for this stock in the session today, as also over the course of the next few days. Lastly, an interesting name is Safari Industries, and the reason why this is interesting is not because the transaction is very large. Malabar India Fund, headed by Sumit Nagar, has acquired about 1.51 lakh shares, 0.68% at 560 each. The key is, I think this is a transfer from the promoters. The promoter, Sudhir Manolal Jatia, has sold about 1.88 lakh shares. More importantly, Malabar held a sizable chunk in this. They know the company very well, and they bought in further stake from the promoter. So it becomes an interesting transaction from Safari Industries. It's not a very liquid stock, but watch out for this one. The baggage makers are coming back in focus if brokerages are to be believed. So it'll be interesting to see what Safari does in the session today. However, let's tell you what's lined up on First Word today. I've spoken about Yes Bank at length. We'll talk about some of the other things as well. Sumit Sarkar takes us through Airtel's mega fundraising drive over the past 3 years. Nikki then joins in to explain why iron ore miners are in a fix and the impact that it would have on the steel companies. Yash Upadhyay then takes a closer look at the narrow rally in the Indian equity markets this year. And Viswanath Nair tells us about the two bidders for RCom assets and what they have offered. With the QIP announcement, Bharti Airtel would have raised nearly $10 billion in a period of 3 years. The money has helped the telecom operator compete with Reliance Jio, incur capital expenditure, and even bring down some of its debt. But with adjusted gross revenue dues to the government looming, Airtel is going to need more funds. So what are the options before the Sunil Mittal loan operator? Sumit Sarkar is standing by to give us a sense of the fund raising by Airtel thus far and the possible road ahead for the company. Sumit, good morning.
Good morning, Neeraj. So 69,000 crore in the last 3, that is close to $10 billion, but still the debt is down by only 9,300 crore, and that is because of the capital expenditure incurred by the company. As you can see in the chart, from 97,400 crore rupees, the debt has come down to 88,100 crore rupees. That is a deduction of only 9,300 crore rupees, and in the same time period, they have done a capital expenditure of close to 74,000 crore rupees. So that's how they have spent the 69,000 crore rupees on an approximate basis. Now let's see how they have managed to raise the 69,000 crore rupees in the last 3 years. Now if you see, in 2017, the company raised close to 14,000 crore rupees by selling its 10.3% stake to a consortium private equity consortium led by KKR and the Canada Pension Fund for around 6,200 crore rupees. Post that, it sold another 8.2% stake in 2 different tranches in Bharti Infratel in the open market. So that's how 14,000 crore rupees from Bharti Infratel. In the same year, they sold 15% stake in the DTH arm, that is Bharti Telemedia, to BloombergQuint for close to 1,700 crore rupees. Now, in 2018, they did the first round of fundraising for their Airtel Africa, for the profitable Africa business. That is close to $1.25 billion from 6 investors, which include Warburg Pincus, Temasek, Singtel, SoftBank Group, Bharti Mittal Family Group, and Sunil Munjal. Now, the funds were used to repay the African unit's debt and for growth purpose. And in 2019, they raised close to 31,600 crore rupees, and they are proposing to raise another 14,300 crore rupees from a QIP. Now, the first round was done in the start of the year. They raised close to $200 million from Qatar Investment, again in Airtel Africa, that's close to 1,400 crore rupees. They did a rights issue of 25,000 crore rupees. The proceeds were used to repay the debt and for general corporate purpose. And they also listed the Africa unit on the London Stock Exchange, and they raised close to 5,170 crore rupees. Now they have proposed a QIP of another $2 billion, that is close to 14,300 crore rupees from the open market, and they will be seeking shareholders' approval for the same. Now, even after raising close to $10 billion, the company still has an option to raise another $11 billion from selling stake in the non-core businesses. So it owns nearly 56% 53.5% stake in the tower business, which is valued at close to 26,000 crore rupees, 80% stake in the DTH business, which is valued at close to 9,000 crore rupees based on the previous valuations. Then the fiber business, which is valued at close to 29,500 crore rupees based on the replacement value of 10 lakh rupees per kilometer. And lastly, the remaining 56% stake in the African unit, that is valued at close to 15,000 crore rupees. So a total of 79,200 crore rupees options that Bharti Airtel still have to raise from the market by selling stake in the non-core businesses.
Well, Sumit, I have a follow-up question to this. Now, they are in the midst of announcements that they want to raise funds. There is also this whole talk of maybe there is some AGR relief coming as well. My question is, does the quantum of the fundraising that Bharti Airtel have to do get altered materially if there are reliefs provided by the government on the AGR dues?
So if you remember the last announcement they made, they had proposed to raise close to $4 billion US, of which 2 billion was from QIP and 2 billion was from debt instruments. But they clearly said that at this point, they're going to raise only 3 billion, that is 2 billion from QIP and 1 billion from debt. And they also clearly mentioned to us that if the AGR relief comes down, most of the funds that they will be raising will be used for AGR relief. And if the amount that they have to pay out when it comes to the adjusted gross revenue liability comes down, then they will use the remaining fund that they raise for debt repayment. So that's how they will definitely raise $3 billion US, but it depends on the AGR liabilities, how they're going to use their fund. Either they will reduce that debt or they'll have to pay off the AGR liabilities.
Okay, so debt reduction is the plan B. If indeed they do get the AGR relief, then some bit of the debt might come down. And it's a very interesting statistic that Sumit pointed out. A lot of people might not quite realize this, but despite the quantum and the mammoth quantum of fundraise that they've done, they've repaid, they've been able to repay, let me put it that way, only 9,000 crores in the last 3 years. That's the nature of the capex that has sucked in for some of these telco operators as well. Thanks so much, Sumit, for putting that into perspective. Well, and sticking with telecom, two telecom players have shown interest in Reliance Communications assets, but the two operators have very different offers. Vishwanath is here with the details. Vishi, what have Airtel and Reliance Jio offered?
So, Reliance Jio, as we all know, that last year at some point in time they had decided that they wanted to buy all the telecom assets at RCom. Now, what we understand under the insolvency proceedings, Jio does not want the spectrum part of the business. Instead, what they're bidding for is specifically the tower assets, the telecom tower assets, as well as the optic fiber. Essentially, this is where the money is to be made in the future. I mean, the spectrum is a little outdated as far as RCom is concerned. And within this, they have about 43,000 towers. That optic fiber business is fairly profitable. So obviously, it makes sense for Jio to buy those assets. Remember that these are assets which will help them share certain facilities with other telecom operators and thereby make money on top of that. Bharti Airtel, on their part, they've decided to bid for the whole game of things, including the spectrum. Jio is offering about 3,600 crore, while Bharti is offering 2,500 crore for the tower and optic fiber. As far as spectrum go, Bharti has said that they will take on that 22,000 crore liability that RCom has towards AGR, as well as the usage charges for the spectrum. So all of that gets merged into that 22,000 crore. Bharti is saying that they will take it on their balance sheet. And we do not know if they're offering any money, but it looks like they're just going to transfer the liabilities on their books. But that's just these two players. Apart from this, ARC and VFSI Holdings are also bidders. That's something that RCom had disclosed to the stock exchanges last month. We do not know what these people have bid. ARC has declined to comment on the matter. VFSI Holdings was formed only in April 2019. They don't even have a website to reach out to. But the point being that as of now, Jio, which was interested in buying the entire gamut of things, is not really keen on the spectrum anymore. Bharti, on the other hand, wants to take over whatever RCom has to offer at this point.
It'll be interesting to see how this one shapes up as well.
Yeah.
Okay. Vishi, thanks so much for putting that into perspective. And as I always say, most of the things that we discuss would be in the form of stories on our website in a more detailed format. Do log on and try and read more about some of these things. As also, the next piece, iron ore miners are in a fix. Excuse me. They are in a fix. After the Odisha government revised the iron ore mine auction process, companies like Vedanta and JSW Steel, which are aiming to bag at least some of the 15 iron ore blocks that go on the block, have to rework their entire strategy now. And the Environment Ministry has not made it any easier. Nikki Mirchandani is here to tell us why this has happened. Nikki, good morning.
Good morning, Neeraj. A couple of things have actually happened in the whole process, which will, nearly 60 million ton of iron ore is going to go under the hammer. March 2020, that forms like 1/3 of the overall iron ore supplies for the country. They're going to be going in the hammer, and the norms for these auctions are just getting tougher. In fact, the loophole right now, where you had multiple bidders coming in and, going forward and auctioning and going for that one particular auction or block for that matter, that has been now closed or shut by the government. But let's look at the way these things have panned out right from November 29th. November 29, I think that was one of the difficult decision around for the government, as well as it's going to be a difficult decision around for the producers here, because the Ministry of Environmental has made it mandatory to seek fresh approval. That is like now the bidders will have to go for a fresh environmental clearance. This is way different than what the expectations were, that once they've been allocated or once these bidders win the auctions or the mines, they would be given a provisional EC for 2 years, post to which they can commence or they can secure EC, and the production will be in continuity. There'd be no disruption here on. But right now the rules suggest that you first get your EC and then start your production, which will have an impact of this. We'll get onto this later on. December 2nd, Odisha government annulled previous 3 rounds of bidding. So all the bids which had come in, all the 3 rounds which had happened, they completely annulled it and said it's because of the procedural nature. December 6th, it gave up a clarification as to why it has done that. It's clearly because at one point of time, there were multiple bidders, like one company along with its affiliates going ahead and bidding for a particular block, which the government said is not allowed. And it was a kind of loophole which many of the players kind of took an advantage of and went ahead and bid for a single block. Obviously, the amount of bids that a single player could put in, the chances of winning that bid would actually escalate because of this mechanism. Government put an end to this. What does it do? Well, Vedanta and JSW Steel both had put multiple bids in the last round of bidding. So clearly, if you see both these players coming in, the top players coming in and wanting to secure, that loophole is a bit of a setback right now for both these companies. Also, this is a great positive for NMDC. Actually, NMDC is an obvious beneficiary to this, because if there is any shortage situation in the country, NMDC will stand to benefit from this move. And also not forgetting the fact that government might going forward also allow the Donimalai mines to function, given the kind of scenario that iron ore industry could face on account of the disruption. That could be the icing on cake for NMDC, but we're yet not sure if Donimalai approval will come through for NMDC or no. Also, if you look at the point where I suggested that now these players, will have to secure fresh environmental concerns. We spoke to the former steel secretary, and she said that this will not just escalate the cost, but it will also increase the production time by, or push the production time by at least 2 years. So clearly, on account of that, you might just see some disruption coming in on the industry. Rakesh Arora has suggested that this is going to be negative for JSW Steel as well as JSPL, given that both of them are non-integrated players, as compared to something like a Tata Steel and SAIL, because they already have their captive iron ore mines. So it's not going to be much of a setback coming in for these two players. But then in the larger scheme of events, if you see, this disruption might actually go ahead and just push the iron ore price a little bit if there is a disruption around that period, and can also lead to incremental imports. This also makes in for the case that if we are staring now at higher iron ore prices, well, there is a case for it. We have 2 pointers where we feel that going forward, iron ore prices just could go northwards from here on. First is moving along the value chain, because we've already seen the raw material prices going up. We've seen pellet prices going up, sponge and prices going up by as much as 3 to 4% month-on-month basis. And let's not just forget the fact that globally, iron ore prices too have been on up move. If you look at this chart in this one particular, from the time frame of 2 months, if you'd see, the prices have just shot up from $70 per ton as compared to $92 per ton. So there is a huge escalation that we're seeing even in terms of the iron ore prices as a whole. all these factors put together might just help the iron ore industry specifically. It could lead to disruption for the iron ore industry, and in turn maybe a great beneficial move coming in for NMDC as such.
Yeah, but for the steel companies, they're in a bit of a fix. Also, especially because as the data suggests, and I urge viewers to log on sometime during the day when the story is published to read up that, Nikki, that previously companies which used to make 12, 13, 14, 15 bids for one block will now, through themselves or their affiliates, be able to make only one bid. That's a marked shift from what they've done in the past.
Yeah, and also I think, apart from that, the environmental clearance is a point where, production
it's not natural inheritance.
Yeah, it's just like, production takes a hit for 2 years, and now we got to see how forest clearance comes up. If the process is also not automated, like we've seen for environmental clearance, clearly we're looking at some tough time coming in for the iron ore industry as a whole.
Yeah, iron ore industry and supplies for iron ore. I don't know how this will impact the whole input cost as well as availability, and therefore steel production as well. Maybe some rethink around the process could also happen, you never know. I'm sure the steel companies will make some representations. But Nikki, thanks so much for putting this into perspective. Very nice piece on what could happen. It's fairly newsy and it could impact steel companies in a meaningful way. But hey, maybe it could impact NMDC in a positive way as well. So do watch out for some of these names. The last piece on First Word today is, well, some look back at the last 2 years' history. Indian equity markets continue to gain in 2019, but the returns weren't as stellar. Nor the rally broad. Yash Upadhyay is standing by with a closer look at the market performance this year and maybe compare it to some of the recent historical periods as well. Yash, what do you have for us today?
Good morning, Neeraj. So it might not come as a surprise to you or for anyone that the last 2 years have been extremely difficult for the Indian markets. Yet in 2019, we are the Sensex and the Nifty both are likely to close in the green, which would make it 4 consecutive years of positive returns for the benchmark indices. And this is how the trend has been over the last 16 years. And this would mean that it would be the longest gaining streak for the benchmark indices since the Great Depression of 2007, when the index had gained for 4 consecutive years as well. And now it is obviously down to the fact that we've seen that market cap polarization driving the index higher, despite of the fact that we've had concerns from the follow-up of the NBFC crisis, which took place in the second half of last year. Then there has been concerns of the GDP slowing down, concerns on the global front with respect to North Korea and the nukes, as well as the US-China trade war. And yet, despite of that, we are seeing a 4th consecutive year of gains for the benchmark index. Yet, despite of that, less than half of the all India stocks have managed to give positive returns. So what we've done essentially over here is that we've taken a look at companies which have a market cap of over 1,000 crore rupees and are tracked by at least five analysts. The reason for doing so is to eliminate those penny stocks as well as companies which are very low on volumes and are very thinly traded, so that we get you the right subset. And out of those companies, out of the 404 companies, which is the universe of these factors, only 169 companies have managed to give positive returns, while 229 companies have given negative return so far this year. Not just that, over a third of the 169 companies, 58 to be precise, have given returns which are less than the benchmark index. So in this case, we have taken the Sensex as an example, and more than a third of these companies have given returns of less than 11.9% in this period. Just to look at how painful it has been in the broader markets, we look at another parameter, which is the number of stocks that have managed to double investor wealth so far this year. And there's an interesting trend over here. Okay, so first I'll start with 2018, where there was not a single stock with these two criteria which managed to double investor wealth. And there have been times in the past where that has happened. Take a look at 2011, where there was 0 stocks, 2008 as well as 2001. But the next year after that has always been positive. Take a look at 2012, where 32 stocks managed to double investor wealth. Then there is even the case of 2009, where 144 stocks managed to double investor wealth. But this is the first time that we are seeing 2 consecutive years of pain for the Indian markets. And exact same similarity has been seen right at the start of the year, start of the new century, when 2001 and 2002, there was the exact same series. So 0 stocks being doubled in 2001 and only 3 stocks that managed to double investor wealth in 2002, and the next year has been positive. So if this trend is something to go by, maybe 2020 may be a positive year, but obviously that could be anyone's guess, Neeraj.
Yeah, let's not try and guesstimate that, because you can never know. You might have 3 consecutive years of pain as well. But Yash, let's just take a look at 2019 and what are the stocks which have gained and what are the stocks which have lost out.
So it has been clearly financials which have dominated this list, Neeraj. I'll start first with Reliance Nippon, which has given outstanding returns in excess of 113% so far this year, as well as Aavas Financier and Credit Access Grameen, who have all gained anywhere between 109 to 113% so far this year. Reliance Nippon, again, it's down to the fact that only 2% of the Indian population invests in the Indian market. So the analysts see a huge growth potential from the underpenetrated market as well as its retail-focused business. Moving on to Credit Access or Aavas Financiers, that one's done well, and mainly on account of its focus on affordable housing segment, as well as its strong asset quality, which has been one of the key positives for the company, as well as presence in the less competitive segments and expansion into newer geographies. That is something that the analysts really like. For Credit Access Grameen, it has seen the analysts are positive of a strong growth opportunity in the microfinance lending business. It has had a consistent track record of execution, and its aggressive provisioning policies that has bulletproofed its P&L account from any of the discrepancies. An honorable mention to this list is HDFC AMC. We spoke about it yesterday, how the stock has managed to crash from its peak by almost over 10%, and that's the reason why it is very close to being above that mark. Obviously, it was above that mark just a few days back, but still at about 98.3% is within 2% of making it to that list. So probably by the end of the year, we might see HDFC AMC also feature in that list. But as of now, it stands at almost 98.3. On the other hand, which are the companies which have been the biggest wealth destroyers? They include the likes of HEG, Vodafone Idea, Indiabulls Housing Finance, all losing anywhere between 70 to 72%, as well as the likes of Yes Bank and Dish TV. HEG, it has been down to the weak product prices on account of the weak steel demand, as well as the lifting of the anti-dumping duty by the Indian government on the graphite electrode being imported from China, and the high needle coke prices, which has put pressure on their margins. Moving on, when it comes to Vodafone Idea, the biggest overhang for the stock was the Supreme Court ruling on the AGR issue, where the company is expected to pay in excess of almost 44,000 crores of dues to the government, which has raised concern over the company's ability to operate as a going concern. That apart, is declining subscriber base as well as ARPU down trading. That have been some of the biggest negatives as far as its operational performance is concerned as well. Indiabulls Housing, it has been the worsening group debt as well as the series of credit downgrades by the credit agencies. That has been a big negative for the company. Yes Bank, the high NPA book as well as its deteriorating asset quality, that has been a cause of concern for the company, as well as its inability to raise money, which has impaired the analyst's view on the stock. And lastly, when it comes to Dish TV, again, there have been concerns over high leverage and its inability to service it. There have been a slew of downgrades. We had one come in from Care Ratings as well recently, just a couple of days back, where they downgraded the company's long-term credit rating to default over its concerns to repay most of its debt.
Well, interesting analysis, Yash, and quite interesting to see that 2 years on a trot now, we've hardly had any stocks which have gained or doubled in prices. That's typically a very good barometer, right? That of a broader market rally. It's very difficult to see index stocks double or Nifty stocks double, but broader market stocks double. And the fact that the numbers have been very low in the last 2 years tells you a story about how narrow the rally has been. That's all that we have on First Word today, but lots more lined up on Indian Open. We discuss markets and macros with Raj Jain of Principal Mutual Fund, business outlook with Amit Jatia of Westlife Development, whether the rural recovery is being seen in that business, and about the real estate sector with Murtuza Siwala of Kotak Institutional Securities. But after this break, a full tilt towards the day's trade.